Morning, everybody, and thank you for joining us on our next installment of Lending on the Edge with myself, Leah Merritt, and my co-host, Lisa Lee in Utah. Today, we're going to be going over self-employed borrowers, but first I'd like to take a moment and, if you don't mind, not to be too somber, but being it's 9/11, 24 years ago, we lost 2,977 Americans in a tragic, incident. And I just wanted to take a moment to remember them and honor them on this very important day to remember. I'm sorry, getting a little emotional. Let me just keep going. And today I'd like to, super excited to introduce Kevin Day and Alex Hernandez. They are our special guest. Kevin is from the Pacific Northwest where I am. He's one of my amazing loan officers. And Alex Hernandez is down in Utah with Lisa. They're both top producing loan officers for Guild. We're so lucky to have you both here with us, joining us to, tell a little bit about your experiences in non-QM and how you help your self-employed borrowers. Kevin has been in the industry for 24 years. He is not only a rock and roll loan officer, but he also is in a band, the Thrill. Sorry, I know you didn't want me to mention it, but he's a guitarist and a vocalist. And
Yep.
Your motto really is to have a borrower for life. And I love that. I love not just doing loans to make a buck, just keep your borrowers, keep them educated. And so we're so excited to have you here and be involved in this with us.
Thank you. Yeah, happy to be here.
And Alex Hernandez is down in the beautiful St. George area of Utah. If any of you guys have had a chance to be down there, it's a lovely place, especially in the wintertime. And anyway, Alex, he has been so busy. He's got so many irons in the fire. He didn't send me his bio, so I warned him. I did my own research and created the bio. So here we go. Alex Hernandez is actually from Las Vegas, Nevada, correct? That area. He went to Dixie State University, and he had some really fun careers when he was a young guy, I guess. He worked at a movie theater for a while. He was a manager / cook, personal trainer, did some time as a salesperson in the car industry, it sounds like. And then in 2016, he started in the mortgage industry where he worked for a credit union and started there. And since 2018, I think you've been at Academy / now, of course, Guild, where he is a top 5% producer there. And based on Modex, he's a top 5% producer in the state of Utah as a whole. So congratulations to that. We're excited to have you. Both of you.
Wow.
I know you're both top producers.
Yeah. So that's a lot of information, Lisa. Great job.
Where'd
you find out that? The internet. Crazy.
Yeah. And he has a really beautiful wife. Congratulations. She's awesome.
Yeah.
So anyway.
Yeah, that's the best accomplishment that I have. Absolutely.
Amen. So so next slide, we're going to jump in through the slides first. And we want to just jump through some statistics and what we can offer first as far as ClearEdge is concerned for your self-employed borrowers. So, this slide is so interesting to me because this talks about the potential of closing more loans, widening that book of business for you and the people that you can market to. 36% of Americans, which is 57 million, are actually have some sort of gig employment or have some independent contractor work. Of course, this grew a lot in the COVID era, as we talked about. And that, this was a really cool statistic, I thought, but 34.8 million businesses in the US are small businesses. That's 99.9% of the businesses here are made up of small business that employ 59 million Americans. So that's 45.9% of all Americans are employed for a small business. These are the guys we want to talk to. They employ, most of the workers. And I looked up what constitutes as a small business, which is basically a business that has less than 500 employees or up to 1,500 if they're a manufacturer, but it goes by the SBA's, standards and sizes. So that's interesting to me. But yeah, I thought that was a cool slide. Next slide.
Thank you. Hey, so when you're working with ClearEdge Lending, we want you to be able to say yes to more borrowers, more self-employed borrowers. Obviously, that's what we're talking about today. So we will go with 12 or 24 months business statements, personal or business combined, And you can have multiple bank accounts, which is a little bit, it helps out a lot, actually a lot of times with these self-employed borrowers. 1099s, we will do 1 or 2 year with year-to-date income. And we'll use a P&L audited or with no statements. So that's
Unaudited.
pretty unique. And unaudited, I'm sorry, unaudited.
No,
That's,
I just
that's
wanted to
the
correct
most
you,
important,
Cynthia.
yeah.
That's a big important
And-
piece, yeah. So.
Yeah, and last month we talked about stacked income, so we will use those bank statements with additional income pieces as well. So we'll go up to 90% with no MI. Loan officers ask that often. No MI, they're kind of taken back by that, but this is non-QM, so and we'll go down to 20% expense ratio. 0 expense ratio, obviously on personal. A lot of people are doing, most of you guys know about bank statement loans, but just want to go over some of the details. Gift funds are allowed, rent fee free, first time home buyers are allowed, and we'll go up to 55% in some cases, debt to income ratio. Unlimited 30-day lates, that is big. That's new. We just came out with that. We rolled out with that last month. And 1 year from a credit event. And then we'll go into the flex program a little later, but that just basically we go off of a DO finding, eligible or ineligible. So we'll do IO on these for all of them, and a 40-year as well. We also have the 5 to 7 arm. Next slide. Next slide.
This is you, Leah.
Yep,
Leah Merritt.
this is me. So one of something that's unique with us, we will use the highest mid score of 50-50 ownership, husband and wife usually. We will consider your non-sufficient funds and overdraft activity. We do allow non-owner occupying co-borrowers. This actually helps out. I've had a couple loans like this. Multiple bank accounts, as we discussed earlier. We do bank statements with no CPA requirements. And we'll do this on owner-occupied second homes and non-owner occupied. And we also, with our Express Doc, will allow under 2 years self-employment, as long as they've been in the same line of work. Each loan stands on its own merit with compensating factors, but we will allow 1 year self-employed. Next slide. We're going through these kind of quick like we usually do because we love to get to the Q&A in the end of this. So Alex and Kevin can kind of give us some of their insights on their non-QM.
Yeah, the 1099, of course, we talk about these gig workers. If you're trying to qualify people up front and you're doing the initial interview and you're looking through tax returns, a lot of times that gig work is just used to be able to lower their, bottom line income or to get more back on their tax returns. You're not usually able to use this income all of the time. It kind of just helps them out with their tax returns that you'll find. But so then flipping them to a non-QM loan, you're able to use this gig work, the 1099 work plus, any 1099s, if it's one source or several sources, we allow multiple sources, which is really cool, and or if we need to drag in other self-employment, if they own a business and they're 1099 and they have, we can use all of that. So that helps a lot. We go down to a 620 score. This again, still just like bank statements, let you go to 90% LTV. And it's great for those people that have inconsistent income as well. So your real estate agents included, people who may not consistently monthly bring in the same amount, with a 1099, they're mostly 1099, right? So they're going to be able to, we just look at that form, we take a flat 10% expense ratio. There's not a lot of brain damage to it because you're not looking at all the deposits and everything else. We do ask to look at year-to-date income on these with just 3 months bank statements, right? Now, again, some people have really inconsistent income. So if the last 3 months kind of stunk and it doesn't really give us what we need, then bring us 6 month statements. Let's prove that what we're looking for is that they're still on that same trajectory as last year or the 2 years before, within like a 20% variance, right? So that's all we're looking for on that. And again, 10% flat expense off the top, and you have that qualified. And again, we can use that with other sources of income. So it's a good fallback for bank statements, right? Or if they have bounce checks, a lot of people, don't manage their account like they should. So this
It's
helps
true.
that too.
And there's just so many gig workers out there now. COVID created so much gig work.
Yeah.
So this
Yeah.
helps out a lot for those.
Have you guys done 1099 loans, Alex and Kevin? Have you done any of these? Or most? No, you haven't? Okay.
Yeah, mainly the 12-month is what we really specialize in. But yeah, it's important not to get in our rut. And I think Kevin would agree. It's hard as a loan officer to do Fannie Freddie loans your entire career and then
Yeah.
get out of that comfort zone to be like, oh, let's do business bank statements. But then even then, not knowing that, yeah, 1099 income, that's great. That's fantastic.
Yeah. Next slide, please, Allie. So the P&L program is huge. You've heard a lot about this recently. A lot of people have been offering a P&L. And the great part, again, this is for those people, they do have to have 50% self or ownership, excuse me, in the business to qualify for this loan, max 80. But this is a great option to bank statements again. If the person say just say they're a commercial real estate agent or something like that, where they get one chunk of, or something to where they have really inconsistent income, or they do great big build jobs or something like that, to where you could not look at consistent, monthly income and come up with it. Because of course, a P&L, you're strictly looking at just the bottom line numbers, what their gross was, what their expenses were, etc. Again, it's important to note that this is an unaudited P&L, and we do not require bank statements anymore on any of the P&L products. So that really helps as well. And again, that's because a lot of times these businesses are inconsistent. That's why you're going this way. And this is another option for those that just don't manage their bank accounts well. And maybe it's just due to receivables, but they have a lot of NSF or OD activity in there to where, we can't qualify those statements. So this is a really quick way to get it done. It's offered on all occupancy types: primary, second home, investment. The LTVs are compromised a little bit on this product because it's truly, just asking for the form from the P&L, and it does need to be prepared by a CPA or a licensed tax preparer. So that's that. And flip to the next one, please.
Next slide.
And that's about that.
We talked a little bit about this unique to ClearEdge lending option, Flex Connect. I actually just used this yesterday with a new loan officer with Guild, actually. So I find that loan officers often get a little nervous to use non-QM because they think they're going to be conditioned to death. This really helps with that. The pricing is the same with any of our other loans, but we go off the DU approval, or if it's approved or ineligible. And basically, it just cuts out a lot of the required documentation, like VOR, no reserves. As you can see right here, I'm kind of just reading it off. But so this helps for any loans that are that your borrowers are just not wanting to come in with so much documentation or can't. Say your borrower has been living with his brother. If you've got it on a DUDO approval, then we can get a no VR. So we'll use these on non-warrantable condos, self-employed borrowers up to 12 months bank statements. This is just a really fun program that we have where you can just kind of eliminate some of the conditions and still have same pricing. So I'm kind of not going over every detail on the next slide. All right. And now to our favorite and most fun spot. So Kevin, let's talk with you first. Tell us a little about your non-QM experiences and why you've kind of gotten in or gone that route. Tell us a little bit about you and what you like, or what your challenges are.
So just a little history about me. When I first started in lending, I was a broker for 10 years. So I brokered everything. And that's all I really knew existed. So I didn't know there was companies like Guild where I could close in my own company's name and have my own underwriters to talk to and funding department and all that. So when I switched over, I was basically like just after the crash, like 2010 or so. I actually started at Academy, was my first lender, kind of like Guild. Worked for them for about a year, then came over to Guild. and then really got stuck in the guild, like, I don't know, ecosystem, I guess you could say, and sure, I knew I could broker stuff, but people would say, oh, well, it's scary to broker stuff and you're probably going to disclose it wrong and this and that and the other thing. So, I mean, the main
black
thing is,
hole.
guys, yeah, but the main thing is, like, don't leave stuff on the table. Like, you've got a self-employed borrower that makes $1 million on their tax return, but with all the write-offs, they only got 50 grand. There's other ways to get this loan done, And I did a few bank statement loans back in the day, and it's definitely different, but it's an easy process with you guys as far as like just getting you the bank statements to start. Like, here's 12 months bank statements. What kind of income can you come up with? And wow, 100 grand a month. Okay, cool. We got a deal, versus my tax return was nothing,
Yeah.
Right.
So so very cool. I was definitely nervous when I first started, and I told my clients, I literally told my first client with the first loan with you guys, I haven't done one of these loans. I don't know what I'm doing. I think I know what I'm doing. Just bear with me, it's going to be a little rough. And just starting it like that, since I had such a smooth process and it wasn't rough at all, they're like, what are you talking about? And I'm like, well, I didn't know.
You're the hero.
Yeah, exactly. I look good just by letting them know this might be a little bumpy. The turn times is what I was concerned about because I didn't know how long it'd take the underwriter to look at something. I didn't know how long it'd take to get docs out. I didn't know how the funding would be. And guys, it was the same, like literally the same turn times as Guild. And I'm like, this is amazing. Like it was truly such a smooth experience. Like, I'm like, why haven't I been brokering for the last 10 years?
Right.
Yeah.
So,
Well, that's
so
kind
cool.
of how I explain it to you is just kind of set up the, the expectations correctly, because the first couple loans usually do have a little bumps, some bumps because you're new to it and you're getting used to the process. But what I always try to say is it should just be an extension to what you're doing right now. It should feel like you're working with people that you know and trust. And we have an open door policy. So truly an open door policy. A lot of companies do say that, but I mean, you can talk to the underwriters and you're in the process the entire way. I mean, we do not, you and I talk a lot anyways, but we don't talk because you don't know where you are with the loan.
So I don't know if I told you this, but your underwriter called me and he's like, Kevin, we got approval. This looks good, blah, blah, blah. I'm like,
awesome.
Who is this? You're calling me? I'm like,
Yeah.
Dude, this is awesome. Yeah, that was very
love
cool.
that.
I didn't expect that.
I love that. I love that your experience has been awesome with us. So, and
Yeah.
I love working with you.
And I mean, this is another thing to talk to your agents about too. It's like, look, guys,
Very
I can
much
get
so.
these bank statements loans done. Like, how many times you come across a self-employed borrower that writes everything off and you can't do anything for them? You probably can through this product. So just another good thing to talk to agents about while you're making your calls.
I love that you mentioned that because I think we covered this in our first installment. We are even, I love going out next week. Not next week, the week after, I have a real estate presentation with one of my loan officers, and they're bringing in 2 offices. And the broker reached out to her and just said, how do I get these people motivated right now? Like, what can we do? And she called me and she said, what can we do? And I said, well, let's talk about things that they don't know about. Like, let's talk about investment properties. Let's talk, and so we just kind of brainstormed and we're putting together a presentation, and we love doing that stuff with you guys.
Yeah.
It gets us out of the
I'll even go to
office.
St. George. I'm happy
In the
to
winter.
go down there. Anytime. I love it. It's already
Well,
cooling off.
Leah, if you want to slum it here in Tacoma, then we should do something like that. That'd be cool. Do something. Do a lunch and
I
learn
would
for
love to.
agents.
Yeah, let's do it. We'll put together the presentation. Yep. Okay.
Before I toss it to Alex, I wanted to say one thing that you brought up, Kevin, about talking to the brokers or your real estate agents. I know you guys have both done this, but we pre-flight the bank statement. So we have a concierge service. Our analysts will send you the income so that you can be confident in sending a pre-approval letter, knowing how much these people qualify for, before they go out shopping for homes and you take the application or, you submit it to us. So that's huge because it's nerve-wracking for you or even us to try to guess what that income is going to be, and then it comes back and the net income or the net deposits are completely different than what you thought, et cetera. So it gives you the confidence to send a pre-approval letter out for your borrowers, and knowing exactly. And like you said, it usually brings significantly more income for them. So their buying power increases like crazy when we pre-flight those deals. So yeah, that was a good point. Hey, Alex, so we're so curious to hear about you and I know you've worked with a ton of lenders, right? And you've dived into this in every way. Like I said before, you're not afraid to take on any borrower situation. So
Yeah,
give us your
so
experience.
it's twofold, right? So from everyone on this call, we all work insanely hard to get clients through the door, right? Kevin, Lisa, Leah, like everyone that's on this call today, it is insanely difficult, and it's probably a miracle that we even get loans done, right? I mean, if you really have to think about how many hands a loan exchanges
Right.
to successfully get one done. And so we work so hard. We leave our house, we're making phone calls, we're going to the golf course, right? We're working so hard, but we're working so hard to get opportunities. And the fact that loan officers all over the country hurt themselves, limit their growth, limit the income potential that they have for themselves, their community, and their families because they're not willing to spend 15 minutes reading the guidelines on your guys' website. So that's number one, because you guys have opened up so many opportunities, and there's tens of millions of dollars a year in production that we would not have in our pipelines if it wasn't for these types of loans, right? So that's one thing that I always tell everybody. You've got to become well-versed in these types of loans. Number two, business owners are some of the savviest people and the best clients that I've ever worked with. And so by alienating this population just because they don't claim enough income on their taxes is a disservice to them, and it's a disservice to you and your business. And so my favorite clients, my most savvy clients, the people that send me the most referrals are business owners who make oodles and oodles of income and have been so frustrated with the lending process over the years that they're just like, I just can't qualify. I just can't buy. Homeownership's not me. They've saved hundreds of thousands of dollars in savings. They've got all this money, and you're telling me that they can't get into a house.
Yeah.
It sucks. And so these clients are my biggest advocates because they've been told no time and time again. And then they come to me and I'm like, oh man, I mean, buddy, your stuff's easy. Like, we're going to get this done in 3 weeks. There's no issue at all. And so that is what it's done for me in my business. And so I suggest any loan officer that's nervous, slow play it, take the time, set good expectations like Kevin's done with his clients in his first experience. But if you gain confidence by doing one of them, read the guidelines, don't go into it just throwing a dart at the wall. Like, you got to know what you're reading. You got to know what you're offering. And the process is as smooth as butter. So
that's cool.
Yeah.
Well, I also wanted to talk about real quick. We have about 10 minutes left, but I want to be sure and show you what Alex has built for loan officers, which is this incredible. I was going around your website yesterday. I was like, my gosh, this thing is so cool. If you could tell the loan officers that are on just a little bit about this, it is a great opportunity for them to get with their clients.
Yeah.
So,
I was really frustrated with losing a lot of my clients because back when I was with Academy, they sold all the servicing rights to, Mr. Cooper and Penny Mac. And next thing you know, I get clients that would advocate for me and would want to work with me that just simply weren't aware. They truly just thought that, oh, Alex sold my loan off, so I guess I'm working with Mr. Cooper now. Okay, that's fine. Alex was amazing, and I refer all my friends and family to Alex, but themselves wouldn't come back to me. And I'm like, why did you refinance with Mr. Cooper? Oh, they already had my loan. It was easy. I was like, well, were you not surprised at the fact that they asked you for a full package? Like, they didn't have anything of you, or what are you talking about? So they just didn't know. So this was a gap in the marketplace that I wanted to come out and fill. And so Rate Update is a interest rate digest that goes out to your database, your referral partners, that educates your borrowers on what's happening in the interest rate market. Are rates going up? Are they going down? Why? It educates them, gives them a 3-month trailing trend of rates. But most importantly, this digest is completely branded to you as a loan officer. And so that way it's coming from you, your headshot, your branding.
Keeps you in front of them. Like
It does,
constantly gives you a
exactly.
reason to stay in front of them. That's so
And
cool.
year to date, I've already closed over 2.5 million in refis because of my system and because of rate update. And that is only because, on average, clients forget our names after 6 months of working with them, which is a tragedy because I'm gonna tell you what, Leah, Kevin, Lisa, I know we have battle wounds from getting some of these files through underwriting. And we're like, man, I went to bat for you and you forgot my name after 6 months, right? And it sucks because but you put yourself in their shoes, right? They're overwhelmed. They just want to get the house. It's transactional to them at times, and they're just like, "Oh, I just didn't think about it. You were great, but I never saved your number, and I just can't find it." And I want right. And so, rate update was built to keep us top of mind with the people that we've already worked with. Most of them who forget our names left us 5-star reviews, right? I'm not talking about the people that didn't like me or didn't want to work with me again. I want to work with the people that were qualified, that actually enjoyed working with me. The problem is we lose them because they forget who we are. So that's what rate update is. But we do have a free community. We teach loan officers how to run webinars and generate leads. So I'm not going to spend too much time on that. I'm just going to drop the link in the chat. Guys, it's 100% free.
That's awesome.
It's 100% free. Go there. Again, we got webinar training, Facebook training, how to get leads with your agents, how to curate an agent list, who to go after using tools like Model Match and being very intentful with who you're going to go work with. So I teach all those things 100% free. And yeah, just because I enjoy it. So
nice.
Yeah.
Thank you so much. I know Allie, we're running out of time. So Allie Driscoll, I hope I introduced her early on, but she is our amazing marketing and queen of our company for sure. First of all, we're going to drop in that our next DSCR is coming up on October 16th. If you guys would be interested in joining us on that webinar. And all of them are found on YouTube, right, Leah? As far as that goes.
They're all recorded and found there.
So we wanted to throw out some, do we have any questions in the chat, Allie?
I did have a couple questions come through. Let me see.
We have to talk so fast now.
Yes.
This has been the best webinar. Thank you guys, by the way. So
yeah, we appreciate your time.
Thanks for having us.
So I think Alex and Kevin, what do you do to pre-qualify a self-employed borrower?
Well, I get their taxes, I try not to bug Lisa too much, but I do a lot. I do plenty of bugging Lisa.
That's good.
I have a small spreadsheet. I run through just a quick overview of their taxes for the last 12 months, see what their deposits were. I look for anything that's abnormal. I look for large deposits, and then I call Lisa. Hey, Lisa, here's what I've got. What do you think? And then I send the package to them and their concierge team to get me the official approval. But I 100% get the taxes and run somewhat of an analysis before I get it going.
Okay. Awesome. Well, and then
how about you, Kevin? Because I'm sorry to interrupt.
Lisa.
Kevin, do you guys get the tax returns first, Kevin, and then
Absolutely,
you evaluate
yeah.
like, hey, this is, and then you say, get me the bank statements. We're gonna have to go that direction, right? I mean, is it something like, or you on the phone? I guess you pre-flight them, but
yeah, we've got the worksheets and get the last 2 years tax returns, check it all out, run all the numbers, and if it's not there, then it's like, I'll get the last 2 months bank statements up front too. Typically at that point, if I'm looking at lots of deposits, I'll be like, hey, we can't go this route, but let's go this route. Send me the last 12 bank statements and then send them to you guys and see what we get.
Have it run. Perfect.
Yeah.
All right, Allie, sorry I interrupted.
Oh, no worries. Another question I see is, what if rentals are the only source of income?
Well, for us, we can actually do these. I know that Leah's closed one. Leah, maybe you want to touch on that.
Yeah, so we will go ahead and use, a lease agreement. You can actually qualify your borrower just based off their lease agreements or their rental income. So 12 months bank statements showing, not 12 months bank statements, 12 months or their latest lease agreement. God,
I'm laughing with you.
Oh my gosh, help.
All we need is the lease agreement and a proof of 1 month rent. Is that right?
1 month bank statement. Yes.
And they qualify full doc or express. I'm sorry. I'm just helping you out here, little sister.
No, help. I need all the help I can get right now. I didn't
but I thought
last
that
night.
was
Sorry,
cool.
guys.
Yeah, we can actually, with 5 properties or less, you can qualify them on full or express doc, right? And that's how you got yours done. And
Yeah,
for the, that's
super
for those
easy.
real estate investors, which can get real sticky. You know what I mean? Now, if they have more than 5 things and they live off their rental investments, or excuse me, yeah, real estate investments, we can do it, but we have to, it's a minimum of 50% ratio, like a lot of those other types of businesses, just FYI. So
Yeah, and mine was a little bit more sticky, hairy. And she
usually
had like
there's
over
always hair.
50. Yeah, but you know,
Sounds
she
like an
qualified.
Alex Hernandez deal.
Close
There's
one.
usually some hair.
True. I just send you guys the hard ones. That's it.
I
save you
know.
the
Oh
easy
no,
ones for
I
everyone
hate
else.
hearing that.
I'm
Those are some
kidding.
easy ones. Come on.
I know. I get it.
All right, Allie, we're ready.
All right. Well, it looks like we are about 2 minutes over, but I have a couple more. So if
Oh,
we
sorry,
are
people.
okay with that,
Yeah.
I'll go ahead and do 2 more. So somebody else asked, can they have less than 2 years of self-employment? If so, what constitutes as the same line of work?
Hmm.
A good question.
We do, you know, and the thing is with the Express Doc, we have Express Doc like Leah mentioned earlier on, and you know, we were talking about this in an internal meeting yesterday, I believe, about we have the same line of work has been stretched out to be such a huge definition, right? It can be we sold
Sales.
books, yeah, sales, like they
sales.
sold books and now they sell trees. I mean, whatever, you know what I'm saying? Like it can be that wide of an
Trees.
explanation. So it could be their skill set. It can be, you know, in general, what they've done as a whole, you know, it doesn't have to be like they sold pencils every day of their life and they still do, but now they're self-employed. So it doesn't have to get that tight. I guess what I'm trying to say. I don't know where I'm coming with pencils and trees, but anyway.
I don't
you know
know.
what I'm saying. But like Alex says, he does a lot of Express Doc. His were mostly 12 months, just and a lot of that is just convenience. We do like to look at 12 and 24 months if we can, just to see if we can pull more income if we need it. So
Awesome. Pencils and trees.
And I think the last question for Alex and Kevin, where are you marketing non-QM type loans?
Kevin, you can go first.
Yeah, so I don't really market, guys. Like I said, I mean, I talk to people on the phone. You know, I talk to agents on the phone. That's pretty much it. I should be marketing more. I should be doing more on social media. I just don't. But yeah, so it's just spreading the word on the phone for me.
I like
Alex?
that.
And that's a great place to start for me as well. That's exactly where I started, was just putting out feelers. I mean, it's a great way to stand out from other loan officers who don't offer this. But taking a 1 extra degree, and something that I teach in our community, again, 100% free, is I would create a presentation, much like what you guys are here today, right? Take 4 or 5 slides, talk about the guidelines, talk about business bank statement as an option. And what I'll do is I'll just record it. And I'll record this video and then I'll run Facebook ads. Okay, so you run Facebook ads and you say, hey, are you in Southern Utah and you own a business? You want to own a home, but it seems out of reach? Let me show you how to get into a home without paying the government all your money, right? Or X, Y, and Z, something that's
Social media is
compelling,
great.
something that they can relate to. You can get a lot of leads off of that. And, you know, it doesn't work for everybody, but that is a kind of the next level in which you can give something away for free. And what I'm giving them for free is this free recorded video. It's 25 minutes in length. It's a quick little presentation of what it is. It's the same conversation I'm going to have with them on the phone anyways. And what that does is it builds trust. So when I do jump on the call with them, they already trust me. They already know who I am, and they don't shop me nearly as much. And they send me referrals, even if I can't help them. So that's another way, very quick, make a presentation, record it, give out the video to everybody you have for free, and you will get a lot of opportunity from that.
That is so cool.
I want to add to that. I was just talking to a loan officer yesterday about this. She's like, you know, I want to start building my business. And I said, talk to everyone. Talk to your nail technician. Talk to everybody you come across when you're going in to buy a present for your friend that's coming up to visit in one of the smaller boutiques. You know, in Gig Harbor, we have a ton of them. Talk to them. You know, don't be afraid to share what you do for a living, because you're helping these people. So
Yep, that's so true. That is so true. Because all these self-employed people we patronize, you know, their businesses. So
and they just don't know.
Thank you guys so much. This is
thanks for going over with us, you guys. Thanks for sticking around.
Thank you
36
for sure.
minutes.
I think
So
if anything,
great.
I learned some things from Alex today, so I appreciate that.
We all can
Well,
take
you
something
can
away
teach
from
me how
it.
to play
Thank
guitar
you,
later.
guys. Yeah.
There we go. I like it.
Well, you guys are both rock stars.
I'll bring a guitar to the sales rally, and then we'll jam out or something.
All right, hell yeah. I love it. Lisa, you're invited. Leah, you're invited as well.
Okay, we'll be there.
Okay. See you
Gil.
guys later.
Okay, you guys. Thank you
Thank
so
you
Bye-bye.
guys
much.
so much.
Enjoy the rest of your day.
All right.
Thank you,
you
I'll
y'all.
guys
put
take
in
care.
with any scenarios. Take
Thanks,
care. Bye,
Allie.
guys.
Thank you.
Thank you.